Wall Street gains for the third consecutive session as a drop in U.S. job openings renews hopes of a pause in rate hikes. Tech stocks outperform and yields slip. The street will be watching for the ADP jobs data set to be released later today. Stocks in the Asia-Pacific surge on a positive handover from Wall Street. The GIFT Nifty 2 is implying a higher start for the Indian market. Brent crude rallies to over $85 a barrel as the dollar weakens. Potential supply disruptions from Hurricane Idalia on the U.S. Gulf Coast also support prices. Gold, meanwhile, hits a 3-week high as the U.S. labor market cools. The government cuts cooking gas prices by 200 rupees ahead of upcoming festive season. Also provides an additional 200 rupee subsidy for Ujjwala scheme beneficiaries. 31 crore families are likely to benefit. Government officials meet Motor executives over the PLI scheme. Sources say the industry raises concerns over what it calls stringent eligibility criteria. Also wants the deadline for claiming incentives to be extended. That's an exclusive. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines and a lot of action in the global markets as well. Third day running of uptick that we are seeing in the US markets as well. So let's talk about all that. And first up, let's take a look at the Asian markets because they are mirroring the moves that we saw in the US markets as well. Ahead of the Australian inflation data, also these markets are in focus. Hang Seng is up around 1%, 0.9%. Taiwanese index is up around 0.8%. So across the board, there's green on the Asian screen. Nikkei too is high by 0.8%. We have Kospi sitting with such gains as well. So you name any index in the Asian markets, they are all higher by 0.6% to 1% in trade, and this is because of the positive handover that they got from the Wall Street as well. The GIFT Nifty, that'll come up for you on the screen. We are looking at the implied open and compared it with Nifty futures. This one is indicating a 77-point uptick at that 19,426 mark. So let's see which way things go. For now, it looks like it could be another day in the green for our own markets as well. And that's courtesy US markets, of course, because key Wall Street indices extended their rally to the third session with the Dow Jones gaining over 290 points, the S&P 500 up 1.5% and Nasdaq outperforming with a 1.7% surge. Shares of AI chipmaker Nvidia closed at a record high with an over 4% gain after announcing a partnership with Google. Other large cap tech stocks like Tesla, Microsoft, Apple and Meta ended 1 to 7% higher. In key data cues, consumer confidence in the US weakened this month against the backdrop of rising prices, particularly of groceries and gasoline. Meanwhile, in July, the number of job openings fell to the lowest level since March 2021. Okay, on that note, let's hear out what Margaret Patel of Allspring Global Investments has to say about the street's view on the health of the US economy.
So people have been really hoping for a recession because historically you would expect with such a big increase in short rates we'd be on the brink of one. But the economy keeps on chugging along. First and second quarter earnings were great. Third quarter looks pretty good. And you can see these economically sensitive sectors are moving. So clearly the market does not think we're on the brink of a recession. So that's really what's lifting those parts of the market. Basically, the economy's good. There's no sector that's really out of balance. And really, we've seen over the last year, the economy, consumers and business is rather insensitive to these huge increases in short-term rates. The banks, yes, they had a little scuffle there, but the other parts of the economy really aren't bothered by these higher rates. They're benefiting from higher savings rates. And so I don't think a small change in labor rates, something like that, is going to change.
Okay, from equities to bonds, let's also listen in to Gabriela Santos of JP Morgan Asset Management talk about fixed income opportunities for investors.
The bond market sale has gotten extended at more favorable prices than we had been expecting. And we would be looking at it as an opportunity to move from what we find is a very heavy concentration in cash, record levels in sitting in money market funds, into building a long-term fixed income solution, which is not cash. So we would be looking to increase duration. There's no need to go all the way to the other side of the spectrum and be looking at the 10-year or 30-year. Really, we're speaking about having a more neutral approach to duration, which is 5 years, 6 years. And actually, when you look at bond auctions, that's been the most heavily subscribed part of the curve from investment managers. It's really that sweet spot where you can lower your reinvestment risk, meaning you can lock in these attractive yields for a period of time, and you can benefit from the price appreciation when they fall over time.
Okay, all right. With that, let's get to the final update on our global market wrap this morning. European markets closed with healthy gains on Tuesday, with the French CAC up about 50 points, the German DAX gaining over 135 points, and the British FTSE surging over 1.5%. The Pan-European Stock 600 closed 1% higher, logging its best two-day performance in over a month. Mining stocks were the top gainers, advancing as much as 2% in trade. Okay, all right, that's a global market action, but how will these overnight cues impact our own markets? We have our research team joining in it with the trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Let me go across to Vivek first up. Vivek, tell us all about the market cues that we are watching out for in today's trading session.
Well, good morning. Quite an interesting session, a good handover from the US markets as well as equity markets worldwide. And, yesterday, Nifty held on to the crucial 19,300 levels. Like we mentioned earlier, Wall Street yesterday moved higher for the third straight session, with the Nasdaq outperforming higher by 1.7%. However, crude oil prices too surged yesterday, almost 1.5% higher. WTI futures up 1.5%, closer to the $81.3 a barrel mark. Yesterday, like we mentioned, the 19,300 level held on the back of heavyweights, L&T, Infosys, as well as HDFC Bank, all of them lending support to the Nifty up move. Markets managed to end with minor gains. It was largely range-bound session. But in yesterday's trading session, the mid-cap index continued to outperform. And within the broader end of the markets, it was actually the chemical stocks yesterday that clearly, lent significant support. All of the chemical stocks were up anywhere between 6 to 8%. Now, coming to the primary markets, a very interesting IPO, Rishabh Instruments IPO opens today. Asian markets on the back of the strong handover in the green. GIFT Nifty 2 is indicating a gap-up start for our own markets.
Oh yes, gap-up opening is what we're expected today. Thank you, Vivek, for all those cues. But a lot of stocks that'll be on our radar today. Surbhi has that list. Hey, Surbhi.
Hey, Sonal. The first one on my radar is Zomato. Now, SoftBank-backed SVF Growth Fund may likely to sell 1.17% equity in the company via block deals. The size of the block deals will be 940 crores. Jupiter Wagons, the company is going to consider a fundraise on September 5th. GR Infra Projects, the company's subsidiaries executes concession agreements for projects worth 1457 crores with NHAI. MPS Limited, the company is going to acquire 65% of an Australian-based company for 9.32 million Australian dollars. The remaining 35% will be acquired in tranches. Strides Pharma, the company approves providing a corporate guarantee worth 135 crores on behalf of its associate company. And lastly, SBFC Finance, a recently listed company, declares its first quarter results. It was a healthy quarter for them. The disbursements were up 32% on a year-on-year basis, and the AUM was up 47% on a year-on-year basis.
Okay, all right. Thank you so much for that, Surbhi. Well, with that, let's talk about the F&O space. Nigel is joining us now. Hey, Nigel.
Well, morning, Sonal. The sense you get this morning is maybe buying the dip may not be such a bad idea. Just looking at the screen, you have the dollar index, which has cooled down a little bit. Yields as well fell overnight, which is normally equity positive. So let's see whether or not we can have a good trading session. Well, looking at the F&O action yesterday's trading session for the second day running, they added closer on 2 long positions for every 1 short position. And now you've seen the short positioning from around 60% just a couple of sessions ago. Because of the kind of addition we've seen on the long side, well, it's come down to close to around 55%. Keep in mind that the rollover data is still quite subdued. So though we have today as well as tomorrow to play out this expiry, I think there's plenty of action left going by the open interest build-up. Now, in terms of the options data, 19,400 call, that was very, very active. It added close to 20 lakh shares. So on the upside, that'll become a bit of a reference point, while on the downside, 19,250 put, that continues to see some writing, which brings us to the levels that you need to track in today's trading session. Now, the 20 DMA, well, that comes in at around 19,450. That's the next level. But you'll want to start closer around the 50 DMA and want to build on from there. On the downside, the recent low, that becomes your reference point. So let's see how this plays out. But otherwise, today, there are the, fair bit of ingredients to tell you that it could be a good session if the dip is bought into. For starters, though, don't go rush in and buy that 75-80 point gap up. Maybe the intraday dip will be a better idea. Back to you.
Okay, all right. Thank you so much, guys, for joining us and prepping us up for this trading day ahead. Looks like it'll be a green screen for Indian markets as well. Time for a short break now. When we return, the government cuts cooking gas prices by 200 rupees ahead of upcoming festive season. Also provides an additional 200 rupees subsidy for Ujjwala scheme beneficiaries. Details on the other side. Stay tuned. Welcome back. You're still tuned in to Power Breakfast on CNBC TV 18. Well, household LPG cylinders will be cheaper by 200 rupees from tomorrow. There are over 31 crore domestic LPG consumers in the country, including 9.6 crore beneficiaries of the PM Ujjwala Yojana. So essentially, these beneficiaries will enjoy an additional 200 rupee reduction per cylinder in addition to the existing subsidy of 200 rupees. So my colleague Sapna is joining us with all the details on the price cut. Sapna, explain this to us.
Well, a big decision by the government, no doubt. Across the board, 200 rupees cut on LPG cylinders. So effectively in Delhi, for example, around 1100 odd rupees is the cost of per cylinder. That will now come down to 900 rupees effective from today. Similarly, for Ujjwala consumers, let's also keep in mind they already get a 200 rupees subsidy per cylinder. So for them, the price now comes down from 900 odd rupees to 700 odd rupees. So that's the way it's going to be. And as I've just said, it's effective from today. And the government has said that it's Onam and it's Raksha Bandhan around the corner, so they want to also particularly target the women beneficiaries. In toto, the LPG universe, the LPG cylinder universe of consumers are around 31 crore. So this is going to impact everybody. Now, in terms of what is exactly the financial implication, well, we are aware of the fact that the existing Ujjwala budget is around 7,680 crores. Now, how much more will be added to that? That's something we'll have to wait and watch and see. There isn't any comment from the government as of now, but no doubt a big decision impacting everybody across the board. And maybe in the coming times, you could expect some more measures just like these, some more relief measures.
जो उज्ज्वला बेनिफिशियरी है, जो 9 करोड़ 60 लाख हैं कनेक्शन ऐसे, उनको तो 200 रुपए मिल ही रहा था. 200 रुपए और भी ऊपर से चीपर हो गया, 1100 से 900 हो गया और 200 डीबीटी में जा रहा है. और एक और चीज, ये जो योजना शुरू की थी उज्ज्वला की 2016 में, तो वी हैड टेकन इट ओरिजिनली ओनली अप टू 8 करोड़ सिलेंडर्स. देन वी इंक्रीज इट बाय 1 करोड़ 60 लाख. सो आज 9 करोड़ 60 लाख उज्ज्वला योजना के बेनिफिशियरीज हैं. उसमें हम 75 लाख और जोड़ रहे हैं.
Okay, all right. That is the word coming in from the union minister. But with that, let's move on now. The union government is meeting auto industry executives to review the production-linked incentive scheme. We understand that the industry raised concerns over what it calls stringent qualification criteria. Industry sources have told CNBC TV 18 that automakers have sought one-year extension for the scheme from 2027 to 2028. Parikshit Luthra joins us now with more.
Well, the 26,000 crore automotive PLI scheme was a big-ticket PLI incentive scheme for the industry among all the schemes that had been announced by the union government. Now, the tenure of the scheme was set to be from 2022 to 27. 85 players in the OEM space and the component space had qualified for the scheme. But so far, there have been only 5 companies which have gone ahead and asked for incentives. And out of those 5, only 2 have received certification, that is Tata Motors and the Mahindra Group as well. Now, why has this been happening? One, the SOPs on how to apply, what will be the criteria, those came out only in April this year. So many of the companies couldn't apply. Then many of the companies are saying that the testing criteria is too stringent. The domestic value addition criteria of 50% from year 1 of application is very difficult for companies to meet, especially new OEMs. And they must be given at least 5 years to meet that 50% DVA criteria. So one, they're asking for more time in terms of the deadline to apply for the scheme, then a 1-year extension. Instead of the scheme ending in 27, it should end in 28. So let's see what is there on the table. The government, of course, listening to these concerns. They want PLIs to be a success. And the fact that only 2 companies have managed to get certification so far is not good news for the government. They would want more players to apply very fast. So there could be some changes announced in the days to come. But as far as the 50% DVA goes, we've been told by the government that everyone knew about these criteria from day one. This is not a new criteria for the automotive industry.
Parikshit, thank you so much for joining us with those exclusive details. Now, staying with the auto space, Hero MotoCorp has unveiled the all-new Charisma XMR, marking the comeback of the Charisma brand after more than a decade. The bike has been initially priced at 1,72,900 rupees. The Charisma XMR will be powered by a 210cc engine and is Hero's first bike to be equipped with a dual-channel anti-lock brake system. My colleague Danish spoke to the CEO Niranjan Gupta at the launch event and began by asking him if the new model would help Hero become market leaders in the 250cc segment. Listen into what he had to say.
As far as premium is concerned, as we have spoken, our strategy is to build a full portfolio of premium products. You've seen us launching product after product in rapid time period. So we saw Extreme 160 4V, we saw launching the 200S Sports, we saw X440 Harley Davidson, we've seen Charisma. You will see more actions as we move through the next few quarters. Clearly, we are extremely serious about this segment. Our aim is to win in this segment. And beyond that, I would not be giving out any numbers, but clearly it's a meaningful market share that we are after.
Right. So the entire industry is currently suffering because of low demand in the rural area, and the same problem is also in the entry-level segment. All the companies are feeling this pressure. How are things at your end, and when do you see all the situation to get normal? And do you think, like with this pressure, there will be some challenges for you to be the number one bike company in the country?
I don't think so. See, if you look at demand part of it, all the underlying economic indicators are trending positive. Inflation largely behind us. If you look at rate cycle, almost peaked. If you look at currency, by and large, stable, as far as if you compare with other economies of the world. You see the capex spend over the last 3 years. Government capex is up to the tune of probably 20 lakh crores. Now, all these capex spend translate into employment, income, and then spending with a lag period of time. So we are not only optimistic, we are actually sure that the demand at the entry segment is also going to come back. We've already seen demand translating at the middle and the upper premium segments. So therefore, it's a question of just percolating it down, and it will soon be back.
So would you be launching more entry-level bikes or scooters, and at the same time, can we expect a proper price reduction in that so that you can attract more customers?
I think it's not a question of more products at the entry segment. Our portfolio is already strong. If you look at HF Deluxe, you look at Splendor, you look at Super Splendor, you look at Passion, we've got a full portfolio. We've got a bigger portfolio than anyone else in the industry. Equally, what we have learned is it's not a pricing game. People generally think that at the entry it's a pricing game. It's not a pricing game. People want to buy. If you look at any category, even at entry, the highest selling model is the highest priced one. So that means people are not looking for the cheaper price. It's just that you have to make it more accessible. You have to probably make finance more accessible, and then make sure that those customers' need that is there translates into demand.
Okay, all new Charisma XMR to hit the markets. That's from the auto space. For now, we'll slip into a break. Up next, we'll get you all the cues from the commodities market. Stay tuned for that. Welcome back. Well, we spoke about macros, stock markets. It's time to put spotlight on the commodity space. Manisha Gupta is joining us with all the updates. Hey, Manisha, good morning. Looking like a good day for commodities.
It is really because of the decline in the US dollar index, which has come off its highs, and we're just about holding 103 right now. That really has been a supportive factor. I'll start with the crude oil prices, where we have seen nearly a percentage gain in the overnight market. That is because the API data shows that the US crude stocks have declined by 11 million barrels in the previous week there. The US rig count also has declined for a 9th straight month for the month of August. The US dollar, as I said, has cooled, and that is cooling in US consumer confidence, labor market, all of that has been supportive. It also is about supply concerns because the hurricane Idalia may disrupt production along Gulf of Mexico. Remember, it makes landing in Thursday evening, and the next couple of days could be choppy ahead of that. The markets also will watch out for the second quarter GDP numbers coming in from US. That would tell you on where the dollar index would move from here. But not just crude, it has been a good going for the metal as a space as well. It's a 3-week highs in gold. It's a 4-week highs on silver. The base metal prices have been surging as well. The decline in US dollar is one part, and the China stimulus hopes is another one. So it has been a good week until now for the metals as a sector too.
All right, Manisha, thank you so much for joining us. And looking like a good market for the commodity space. And in fact, the Asian markets as well, they're doing well. So as we end the show, let's quickly take a look at what the Asian markets are doing. Higher in trade. In fact, Hang Seng has extended its gains. It was up 0.8% when we started the show. It's up 1.2 now. Taiwanese index also higher in trade. And it is really the impact of what we saw in the US markets, 3 days running in the green. And that is expected to positively see a rub-off impact on our own markets as well. The GIFT Nifty indicating or implying an open of 80 points in the green. So looks like it will be a day in the green for Indian markets as well. With that, we'll take your leave on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.